Okay, welcome back. 40 points on the Nifty. We're actually looking better and better compared to where we started at 9:15. So definite improvement all around. Now, the Motilal Oswal conference, of course, in Mumbai is underway. And we had Ramdev join us yesterday, the chairman and MD, joint MD at Motilal Oswal, who told us that one of the things he's noticing is that more and more foreign investors from different geographies, not just the traditional London, Singapore, US kind of geographies, but other newer geographies are also registering and showing interest here in India. So my colleague Nimesh actually caught up with one such investor. He caught up with two gentlemen, Fujimura Tadahiro, the Chief Investment Officer at Asian Investment, the CIO of the Asian Investment Division, and Paul Simon, Deputy Head of the Asian Investment Division of Sparx AMC. Now, he began by asking them about the outlook for global as well as Indian markets from here on. Listen in.
I believe in the past, U.S. market or Chinese market led the worldwide stock market. But I believe now Japan is booming. But after Japan, I believe Asian equities time is coming. And especially India, maybe the very attractive market, I believe.
Sure. You spoke about India being an attractive market. Yes. What's making you bullish on India? What are the ground level changes that you see which is making an investment case for an investment manager like you?
I think one simple idea is demography. Still, India is a very attractive country as a growing population. And the second point is global changes. You know, China used to be a worldwide biggest factory, and the U.S. led the consumption. But now the world is fragmented, and the market demand is changing now. So I think India is very attractive in terms of supply chain shift or adapting to the variety of demand, I think, for the investors.
Sure. Paul, thanks for joining me, and pleasure having you at the conference as well. You manage the India portfolio, right? How do you construct the India portfolio sitting out of India, and what are the benefits or what are the opportunities that you see when you're constructing the India portfolio?
Thank you. I too am based in Tokyo, Japan, so we manage an India fund based out of Japan. And when we look at investing in Indian companies, there are two criteria. The company needs to grow at roughly 50% higher than Indian GDP, and the company needs to generate excess returns on capital of roughly around 5%. That's how we look at companies in general. And we, because of our legacy, Sparx is a legacy small-cap firm. We focus on mid-small caps in Japan, though we do multi-strategy today. The India fund is also focused on mid-small cap, and that's where we think we can add a differentiator as a long-term patient investor.
Sure. Briefly, when I was having a word with you, you said large part of your investments is in the financials, whether it's banks or maybe insurance companies as well. Take us through your way of constructing the India portfolio and why you like financials in India.
So bulk of our portfolio is in financials. So there are two aspects. How we look at financials is in two aspects. One, there is credit-based and non-credit. It is safe to say that there is no Indian growth story without a credit growth story. So that part is quite obvious. What we think is more attractive is the non-credit part of it, whether it's insurance, whether it's asset management, whether it's brokerage, or the infrastructure plays like the data companies or the exchanges in India. So there are multiple themes on the financial space, and credit will be the bulk of our portfolio. And there, I think the biggest play is the big banks, which meet both our criteria. And we also find specific niche plays, whether it's in affordable housing, whether it's in gold finance, etc.
I'll come to you on the India part, but Fujimura, from a global perspective, how do you look at China, and are you even seeing a trend of a lot of money moving out of Chinese equities into the Indian equities?
I think now the worldwide money is coming out from China, and they're going to Japan or India or other Southeast Asian countries, I believe. Of course, depend on the variation. China may be the opportunity to invest in, but in the long term, not China, not Japan, India or other Asian country may be more attractive, I think, because of the growth.
So I understand you never used to travel too much to India, but now you've you've increased your travel and you want to come more and more into Indian market. So what are the sectors or what are the companies that you're finding attractive in the Indian markets?
I think, as Paul mentioned,
Yeah.
I have been Japanese small cap fund managers, and the Indian market is same as Japanese small cap market, broad universe, and not covered, and huge growth potentials. So I believe not any industries in the mid and small caps. There are many good companies, I believe. So I rely on Paul to uncover new attractive small caps in Indian market.
Right. Paul, I understand you have a large exposure in the financials, the banking space, but I believe you don't have any exposure to either IT or pharma names, and especially pharma has done well in the last 6-8 months. So, what's your view on pharma? And do you think there is a bit of a miss out feeling that the fact that you don't have any pharma stocks in your portfolio?
Well, it would not be fair to say that we have no pharma exposure.
Okay.
We don't have any pharma export exposure.
Okay.
So we have domestic formulations plays. But on the export side, we don't see that as being an India growth story. And I think there are way too many variables, whether it is with FDA inspections or whether it's with product approval cycles, etc. So we think that it's too complex a name for us. And for us as generalist investors, we feel that a consumption-driven domestic formulations plays a much easier story for us.
The one big theme in the last 2-3 years in India has been the big outperformance of the mid-cap and small-cap. Even in Japan, you would have done some experiences on the mid-cap, small-cap in Japan as well. What are the similarities? And B, are you getting a lot of opportunities to invest in the mid-cap and small-cap space in India?
Yeah, so we think for us, it's two reasons, right? For us being based in Japan, we think that the large cap market is covered by excellent managers in India and also abroad. And we think for us, the differentiator is to take a longer term view because we believe that in a way that we've time traveled. In Japan, we've seen a lot of these themes play out, whether it's in industrials, consumptions, basic materials, etc. And we're trying to bring that intelligence and see how we can predict how things will play out in India over the next 10 years. And across sectors, we see multiple opportunities. And we could say that markets have rallied quite a bit in the mid-cap space, but also we need to look at where they were in the start, where they're sufficiently valued, and what is the growth potential. So relatively speaking, we still think there's a lot of opportunity in the mid-small cap space.
Okay. What could be the key triggers that you'll be watching out for further increasing the India exposure?
Yeah, so in the space where we are, I think liquidity drives a lot of the pricing, especially in the mid-small cap space. So we'd like to let a little bit of the hot money get out, and then when valuations correct a bit, not that we think on absolute levels they're expensive, but from a liquidity-driven perspective, we think movements could be very volatile. So we're waiting for, let's say, slightly better valuation conditions. Yeah.
All right, interesting conversation there. Bullish on the India portfolio, particularly financial. So interesting commentary coming out there. But let's